All right. What is going on, Discord and YouTube family? Welcome back to another edition of Market Review. Sorry, I've been a little busy. I haven't been able to get these done. I'm in school. I got a big project that I've been working on that's due on Monday. So, been taking some time to myself, just focusing on the project. But I have been taking trades. If you follow me on YouTube or Twitter, I post my trades over on YouTube and I post them over on Twitter. So it's at the underscore at the trader at the underscore trader shop. So trader shop, something like that. I don't know. It's in the description. But anyway, um, as per usual, I like to do a market review. Friday, I got a little extra time. Plus, I got the weekend to finish the project. So I decided to knock this out. But honestly, today played out exactly like I thought it was going to play out, right? Like when we came into the market this morning, we specifically said, first and foremost, I think that one of our Discord members, Dez, in his Discord, he has another Discord. If you guys want to look him up, Sniper Trades or something like that. Um, let me be more accurate with that. It's a Sniper Trading Community. Shout out to Dez Trades. He got his own YouTube channel, so definitely go look him up. Free Discord, right? Like my Discord is premium, but I'm also in his Discord. But we all trade together inside of my Discord, right? So, but we just here to try to help, right? Like we're not trying to say we're gurus or no shit like that. But if you're struggling and you're interested in getting better, you can pay $40 a month for my Discord, or you can go in his Discord for absolutely nothing, and I will also be in there. More time, obviously, is dedicated in the premium. But anyway, yeah. But we warned in both Discords. Hey, listen, it's Friday. The market's had great price action all week, right? We're probably heading down, but it's most likely to stay inside of a range, right? And it's going to just chop you up if you trade in the middle. As a matter of fact, I actually wrote it in the plan, right? So what did I say? The plan here is the gray box. This is kind of how I'm reading the current conditions. I said we're ranging at the highs of an uptrend. We're bullish as long as we stay above 19,979, which we accomplished, right? We're bearish as long as we stay below 20,337, which we did. I said in the overnight session was in large consolidation all night, but we are still in an uptrend on the daily. We have a gambit of FOMC speakers today, so the range could continue. Like I'm telling you, I write these plans at like 7 a.m., right? Like before the market even opens, okay? Like 2 hours before. I will only look to participate at the extremes, right? Until they break. Trading in the middle in all capital letters today will blow your account. So if you're watching this and you were a casualty on this day, it's probably because you took your entries in the middle of price, because today was just one of those range days where if you're a breakout trader, you're going to get smoked to the upside. You're going to get smoked trying to short or long in the middle. Like the market just was moving really slow, and it made sense because we had done so much beautiful price action to start the week, right? My bearish plan, I was looking to short weak rallies into this daily supply area. Price never came up here. Actually, it did. It tapped like right at the edge of it inside of the 6 a.m. candle, but I wasn't trading yet. But anyway, I was looking at short week rallies. You can see we got that short on Thursday at 2 p.m., right? I wasn't trading at that time, but the shorts definitely came in. I've been looking at this plan all week. You can go back and watch all of my preview market plans. Like they're all there. PM session range. What were we looking at? The high was 20,337 to 20,235.75. Now, people may look at this and be like, yeah, you're writing the range, but what do you do? Well, read it. It says, look to short the high of the range and long the lows of the range, right? Or a break and retest above or a break and retest below. So essentially, if we're very bullish, this PM session range, what will happen is we'll take out the PM session high, we'll aggressively push up, and we'll come back into the PM session high. And then I'm usually looking for a break and retest off the high. Same thing for the low. If we're aggressively bearish, we'll break the low and we'll come back up, and I'll be looking for a break and retest off the low. So that's how I play this. That's why it's the same range every single day, because the market can change a whole bunch of stuff. Volume, participants, everything. All that can change. What can't change is time, right? Like time is the constant. And the more you understand time, the better you'll understand price action, to be honest, right? And then to the extreme level here was the bullish zone. And I specifically told the Discord I didn't expect us to come down here, and we didn't, right? It's the end wall down here from 27 April. I would have been looking to long this for sure, but price never even came back down here. So in regards to the price action, let's drop down to the hourly candle. And again, you can see the same price action that occurred from 8 p.m., right, to 10 a.m. We got the opposite from 10 a.m. to now, right? Like market's still open as I'm watching this, but this is the exact same price action. And look what we did, right? If you just literally take a look, all we did was trade in between 3 p.m., right? 3 p.m. and 1 p.m., right? We swept 1 p.m. at 8 during Tokyo. Then we traded up. We put this ridiculous candle in. I specifically said, hey, at the top of this candle, look to go short. At the low of this candle, be careful, right? Just be careful, right? But you can see we traded back into the top of this range, fair value gap, supply zone, top of the range, chessboard high, whatever you want to call it. This is the top. This is where you should look to short, okay? The market traded up here, came all the way back down to the lows, and then you could look to long right here, fair value gap off the 15-minute, right? Like low of my chessboard, all of that. But what does it line up with? It lines up with the low or the 11 o'clock price or the 10 o'clock price from yesterday, right? Like it just, man, there's so much knowledge in here. It just makes me excited every time I go through it. Anyway, 15-minute chart. Let's break down price action a little bit closer to price. I'm going to turn the macros on and we're going to follow time, right? Like I don't even trade with these macros, like the indicator that much, but I do find it very useful when I'm reviewing price to kind of illustrate to you guys how time really works, right? Like inside of these macros, now people will trade them however they want to trade them, but you got to back test to figure out what you want to do when you're trading macros. For me, the way that I trade the macros is whatever the macro does based off structure. I'll say that again. Whatever the macro does based off structure, I'm looking to do the opposite in conjunction with structure, i.e., the market traded up into 930. This was the opening price. We continued to push higher. All right. In between here, I try not to do anything because I know the 4-hour candle is closing. Could you take an early entry here? Absolutely. But look, the market comes right back to that entry, right? We trade down into 950. That means that we should be looking to go up targeting 10 o'clock. Why are we looking to go up targeting 10 o'clock? Because we're at the high and the 10 o'clock candle needs to create a wick. Okay. So it cannot create a wick. If it's trying to go down, it cannot create a wick from the low. It has to create a wick from the high. Therefore, right up here at 1007, 1010, you anticipate the market trading up into 950, and then I'm anticipating downside inside of the 1010. Now, I actually screwed this up, right? And I'm gonna talk about this because I didn't trade the NASDAQ, I traded the Dow. I screwed this trade up, but I still made money on the day, right? Like I was actually looking to go long off the 950, which I wasn't wrong. I just was trying to hold for way too long, right? So, but I'm gonna go over this when I go over the Dow. But anyway, we trade up into structure, right? Structure was broken on this side, right? You can tell this candle right here. We were talking about this 726 candle. It took out the highs, took out the lows, but ultimately it broke structure to the downside. So what do we got to do? We got to go back up here and retest this area. As long as the market stays below 20,288.50, you anticipate some type of sell pattern to commence. The market opens at 930. It stays below this high. It drops below the low that brought it there at 224. This was the signal to go short, okay? Once the market broke through this and definitively broke through it, you anticipate the retest of this area at 266 through roughly about 279. And boom, there's your entry, time and price. Now we just trade down. We got our in-wog there. A lot of people probably got trapped going long thinking, oh yeah, we're tapping into the in-wog. It's like, yeah, but we're at premium, right? Like we're at the high, okay? These 1025 and 1125 are macros I made up myself just based off back testing. And what price ends up doing inside of those 30-minute increments, it trades just like a macro, right? 1037, we trade down inside of 1025. 1045 takes us up to trade down into 1050. We rally up into 1050, but we're still bearish, okay? We rally up into a 1050. Why? Because the 11 o'clock candle needs to make a wick high, okay? Now, we flip bullish right here. This is where I'm looking for longs below this low. Right? I can still short, but I need to understand the target. I can't go much lower than this low because from this high to this low, once we took out this high, the market now is in bullish character, right? But before it leaves, it's going to liquidate the lows, right? Before it leaves an area. So it liquidates the highs and then it's going to liquidate the lows. This is where people get caught trading in the middle. We trade down into 1125, up into 1150, right? Why? Because 12 o'clock needs to make its wick high. We trade down. Again, people will take this entry long right here and put their stops where? Right here, right? A lot of times their stops get taken, but the market was generous today. It didn't take out their stops, okay? Now we're bullish until this low is taken. So everything down next to this low is a buy. What do we look for? Time. 110, 140 opens, right? We trade down into the 120 area. I usually look for an entry somewhere in this macro. It plays differently sometimes, but anywhere near this low, I'm looking to get long, essentially, right? So once we tap down into here, this was probably a really quick wick, but we trade down into 130 and then push higher. But notice how we still couldn't get above 11 o'clock price, right? The bulls are still in control until this low has been taken. But the market is struggling to get back above the end wall, right? Or the new week opening gap, right? So a lot of people will get stuck here trying to trade in the middle. Me, I still think this is bullish, more so than bearish. So we'll see if we can finish up toward these highs. But obviously that's all the price action that we can go over. But for the most part, the pre-market plan worked, right? I was looking to get short at the highs, right? I didn't do it because again, I was trading a different instrument and I was being hard-headed, right? But that's the human nature part of it. But the plan worked, right? The system worked. That's the ultimate goal here. Let's move over to the Dow Jones and we can take a look at the pre-market plan over there. Again, consolidation at the high of the uptrend. We're bearish as long as we stay below 41,869. We're continuing to stay below that level, so we're still bearish. We're bullish as long as we stay above 41,114. You can see the market's trying to take out this low currently as we speak. Bears were unsuccessful in breaking price below the previous day low, and bulls have balanced price near the daily fib, which is right here, okay? As long as the uptrend is intact, I want to look to participate in longs targeting the DVI or this yellow box here, right? And weekly projection to the upside. So I was more bullish than bearish on the Dow because of where we were in price. So I had the thesis that the NASDAQ would actually rally higher. My thesis was just incorrect, period, right? And that's okay to be wrong. But was I on the right side of the market when I traded? 1,000%, 1,000%, right? So what was the range? 41,869 at the high to 41,765 at the low, 41,493 to 41,235. Notice how we never came up to this high, but I'm going to go over that when we come down to the lower time frames. I was looking for a bearish test up here. We couldn't even get that, right? We didn't even get up that far. All right, so let's come down to the lower time frames because there's something interesting that happened that we called out this morning in preparation for trading. That interesting happening was the 7:15 candle. We specifically said, hey, listen up. This candle, just draw a box on it, right? Draw a box from here, draw a box from here. That's your pre-market plan, right? Because whenever we see this, right, essentially what that candle is doing is creating the range for New York, okay? It doesn't mean that we can't go below it. It doesn't mean we can't go above it. What it means is that's your range, period. So when we're at the top of it, and this is why I said I did some stupid shit this morning, right? I took the market long, right? But again, when I say stupid, it was a very, very good trade, right? So I took the market long at 7:30. I got long over here at 41,514 or something like that. No, I got long here. No, I have to look at my executions, but yeah, it was right here. Yeah. I got long 41,514 right here. And then I rode the market up to here, and then it started pulling back on me. I locked in profit. Actually, I got the trade somewhere, but it's not important. But anyway, after that, I still continued to try to get long. And I told the Discord, I was like, yo, I'm going to take one more long. It didn't work out. And I was like, yo, I'm just wrong. I'm going short, right? So I ended up going short at 41,544. And this was a beautiful trade, except I got stopped out by this stupid ass candle up here, right? Like it was really dumb. It wasn't stupid. I just should have never moved my stop in profit. Like I moved my stop in profit, I think by like 20 points. And then this candle right here came back up, stopped me out. And at that point, I completely locked the computer. But you can see from my entry, right? If I had more time, I had to take my daughter to an orthodontist appointment. But if I had more time, I probably would have just held this because my target was this low right here. I was targeting this low here at 186. And then I told the Discord my next target was going to be 41,240. And then my ultimate target was the previous day low at 41,114, right? And you can see what is the market doing. It took forever to get there, but the thesis is correct because I'm viewing the market correctly. Once I got out of my, human nature, right? Like, because you can understand the market in your system and you could still fall in love with the price action, the fast moving inducement of the candles and still end up taking a dumbass trade. I didn't take a dumb trade because my risk was managed, but it wasn't the trade that I preferred because I like to be in the right the direction of longevity, meaning I like to put my trades on and take them shits off by the end of the day or when they hit profit target. In order to do that, you have to be in the correct direction. All right. So ultimately, we adjusted the pre-market plan to say, hey, we're looking for shorts up here. We're not looking for longs until we come back down to the low of this range. You can see we swept the low of this wick, found longs back up to 1150, traded back down to the lows again, right into the lows of the chessboard, and went right back up to the low of the new range, right? This candle here created a new range. So whenever we get ranges, the market plays the same way, same rules apply, right? Break and retest off the lows, break and retest off the highs, short the lows, or short the highs, long the lows. Those rules apply whenever the market is in a range, okay? So if we just take a look at the price action, and again, just follow time, right? We traded up into 950, shorts at the top of 10 o'clock. Traded down into 1025. I told you this was the one I made up. Traded up, but no longer able to take out the high until when? 1150, when that's when the market was back from lunch. Put in a double top pattern here, traded down, broke these lows, which is what I wanted the NASDAQ to do. It didn't do that, but the Dow did, right? The Dow broke the lows and immediately double bottomed and found buyers. Now the PM session is trying to push higher and its first target is going to be trying to get above 11 o'clock price. Does it do it? I don't know. The 4 hour looks really bearish, but I'm done trading anyway, so I'm not really sweating it, right? As far as the S&P goes, I'm not really going to go over it because to be honest, it looks just like the Dow Jones, right? Like it did the same thing the NASDAQ and the S&P did. And what I will say is like, if you struggle today, right? If you gave back all your profits, right, from Monday through Thursday, it's because you need to understand the context of the market. See, everybody talks about psychology. Everybody talks about risk management. Everybody talks about strategy and systems. Nobody really is on the YouTube preaching about context, right? Because your strategy, your system, and your psychology and your risk management could work one day. But if the context of the market is, hey, we've rallied all mother-loving week, right? We've rallied all week and we're at the high. We look exhausted. And there's 37 FOMC speakers speaking today. Does it really make sense for the market to make another huge move on a Friday? Maybe, maybe not, right? But it's important for you to take that into consideration when you're getting ready to enter a trade, right? When you start to put context, reasons, understanding behind your trades, you'll do way better as a trader and consistently being profitable. So that's my little spiel on the end of this video. I did take some more trades on gold last night, but like I said, if you follow me on Twitter or X and you follow me on YouTube, I posted those trades already. So I'm not really going to go over it, right? I'm just going to try to stick to the market review portion of these videos. That being said, my name is T Hobbs. This is the market review, and I'll catch you guys on the next one, man. Peace.